Netherlands takes up the largest share of exports of roses from Kenya, followed by the United Kingdom. So this is majorly due to a consequence of Brexit. And we also have countries in the Middle East, Saudi Arabia, and the UAE. And then there's an interesting country, which is Kazakhstan. So this corresponds to a decrease with the exports to Russia in 2022, majorly because Russia was kicked out of the SWIFT system, so which meant that Kenyan exporters could not be paid through the system from Russia. So an alternative route had to be found, and hence you're seeing the growth in Kazakhstan. My name is Griffin KAIGA. I work for COLEAD. I'll share a bit about in one of the slides. I'm joined by Feline. She'll introduce herself later. And we did a study that was published earlier this year about the flower sector, mostly to do with the value chain, the market, and a bit about the logistics. So yeah, I mentioned I work for COLEAD. I'll share a bit about it because I feel it's important. So we are a non-profit professional association working in the horticulture and from the horticulture to the agri-food value chain. We have a footprint in over 140 countries, and we work to promote sustainable and inclusive agriculture. So our mission is to facilitate the contribution of agriculture to the Sustainable Development Goals. She'll introduce herself, I guess.
Let me stand here, maybe that's easier. So indeed, my name is Feline. I'm a consultant for inclusive and sustainable horticultural value chains, and I work for QPoint, which is an independent Dutch consultancy focused on food safety, on quality management, entrepreneurship, gender and inclusiveness. And I'm also based here in Nairobi for QPoint. We also offer tools such as quality manuals, food safety manuals. We provide training, but also do research such as this market study.
Maybe I'll take this one. So the study focused on roses and summer flowers, and the aim was to support the decision-making process of entrepreneurs by providing them with technical and also about market information.
And then just to start with a bit of context, I think already the word export has been mentioned the whole morning. So of course, the floriculture sector is very much export driven, with about 95% of the flowers intended for the export market. And the cut flowers are a really important factor in the export of Kenya. So it's the second highest contributor after tea. And especially roses are of importance as they account for 66% of the cut flowers exported from Kenya. What we see specifically in the rose value chain is that from the 1990s, there has been a shift from more open field growing into the larger greenhouse growing that requires a lot of innovation, technology, efficient logistics. And that's also why we see in the rose value chain that it's really dominated by larger growers that have a lot of hectares. And that also means that new entrants have a more difficult time entering the rose value chains, as the large growers already have an advantage of scale, and also you require substantial investments to start a rose farm. And then to focus also a bit on the summer flowers. So although the roses always have been of importance, there's also increasing demands for summer flowers, because there's a bit of a shift in demand from the mono bouquets into bouquets that are mixed. So that includes roses, summer flowers, and green foliage. So we see currently about 70% of the flowers grown in Kenya are still roses, and 30% are the open field flowers, such as summer flowers. But it's likely that in the coming 5 to 10 years, this will be more a 50-50 division, also highlighting the importance of these summer flowers. So there are many summer flowers, so there are about 70 to 80 types that are grown here in Kenya. And in the summer flower value chain, we really see a division between the large growers, who are now diversifying also into the summer flowers, and the smallholder farmers who focus more on the niche varieties. So the smallholder farmers also have a chance here in the summer flower value chain because they can focus on the niche varieties, but also because it's mostly open field growing, so you require less investments to start a farm.
Okay, a bit about the export markets. So we all know the Netherlands takes up the largest share of exports of roses from Kenya, followed by the United Kingdom. So this is majorly due to a consequence of Brexit. And we also have countries in the Middle East, Saudi Arabia, and the UAE. You can see the compound annual growth rate is growing at a faster rate. And then there's an interesting country, which is Kazakhstan. So this corresponds to a decrease with the exports to Russia in 2022, majorly because Russia was kicked out of the SWIFT system, so which meant that Kenyan exporters could not be paid through the system from Russia. So an alternative route had to be found, and hence we are seeing the growth in Kazakhstan. There are other markets such as Norway, Switzerland, and Australia. Same story for summer flowers. Like Feline mentioned, there's a huge growing trend in summer flowers, as you can see from the compound annual growth rate, for more or less the same countries.
Yes, and then into the logistical challenges and developments that we have found during the study. I think also already a lot has been shared during the presentations before, so maybe see this more as a summary of what has already been shared. So if we look at the summer flower value chain, one of the challenges is that smallholder farmers tend to have limited access to cold chain facilities, such as they rely more on insulated trucks instead of the cooled reefer trucks. So that's a challenge there. And also for the smallholder farmers, the challenge is that the domestic infrastructure is very much focused on the big volumes, meaning that for smallholder farmers, there is need for consolidation, which of course increases administration requirements, more logistics, but also risks for quality control. But also if we look at opportunities, there is an opportunity to increase the packed at source facilities. So to have more value addition and do the bouquet making here in Kenya instead of in the destination market. So we already seen the Dutch Flower Group opening a very big facility in 2024, and they have the opportunity to make 1 million bouquets a month. So there is still a big opportunity to increase there as well. And of course, a very much a development that also has been mentioned already a lot is the shift to sea freight. Because mostly of the increased costs that also have been shared already, and of course the demand for sustainability that is especially coming from the export destination countries. So we see that in 2021, about 2 containers a week were sent by sea freight. And there was some growth in 2023 where it was already 25 containers a week. So we saw that there were actual improvements happening, but of course due to the recent geopolitical tensions and the situation around the Red Sea, these developments have been put on hold. And then if we look at some research that is done by the Rabobank, they researched also the future of sea freight, and they found that in 2030, they expect to have about 19% of the flowers going to the EU and UK by sea freight. So their expectations are a bit lower than some targets that have been set in the flower sector. Also based on the fact that most farms are not able to fill containers themselves. Even farms ranging from 10 to 35 hectares are often not able to fill full containers. So that has been taken into account in their studies. Then if we summarize the shift to sea freight and look at the main advantages and disadvantages of sea freight, I think the first has been that sea freight offers the lower transportation costs, even cutting transportation costs by about 50%. And since transportation is about 30 to 40% of the total export cost, this is a huge reduction and has huge implications on exporters as well. Another advantage, also relying on strengthening the sector, is that it has greater capacity. So the current shortages for air freight, sea freight offers greater capacity, which is especially of relevance for the high volume, low cost markets, such as the big box retailers. And of course, it is a more sustainable option as it reduces the carbon footprint of the transportation to the export market. But always, if there are advantages, mostly there are also some disadvantages. So the first one is that smallholder farmers are not able to fill a container, and even the bigger farms, ranging from 10 to 35 hectares, are not able to fill a container themselves, which increases also requirements for traceability and risks for quality control. Then we see that the transit times are quite high, especially if you compare it to air freight, of course. So without the recent disruptions, it's about 28 to 35 days. So also with this variability, there is of course a challenge if we are talking about peak periods like Valentine's Day or Mother's Day. Often that means that you already have to take into account this variability and that flowers are in storage up for a few longer days, which can risk the quality degradation. And then, of course, the major disadvantage at this moment are the recent transport disruptions. Then maybe to conclude, some main market opportunities for the rose sector and the summer flower sector. So for the roses, there is a market expansion possible beyond the traditional markets like the EU and the UK, like Griffin already shared. There's also a shift going on to have more direct trade. I think we also heard it during the panel just now, that the trade going through the auction is reducing a bit. And of course the hybrid logistics, so not to fully focus on air freight, not to fully focus on sea freight, but to make it into, how Mr. Tulesi mentioned it, a multi-modal approach. And then for the summer flowers, yeah, so for smallholder farmers, it can really be good to focus on these niche varieties, as there's really some room in the market still. Also because there's really an increased demand into these mixed bouquets. And as smallholder farmers also to collaborate to find markets together, such as, for example, through platforms like Floriculture. I think that was our presentation.